Hi guys, I'm going to run through the preparation of the financial statements for Fabulous Photos, which was the task that you were set during the exam just before the holidays. The reason is to show you how I do it, and hopefully to help you in the process of doing this in in your practices, and also leading up to the final exam later in November. So. Just make a start. The first thing to do, of course, is to run down these adjustments and record the adjustments. So the very first adjustment here is an invoice on hand for fees of $736. Now fees will always be fees received. So if I go down here, I can see the fees received. So in this particular case, we've sold something, photographic services or photos, for $736, including GST. And we've got to record that information. So we're going to have to change fees. We're going to have to change GST. In this case, because it's one of our customers and we're going to receive payment from them, it will be an accounts receivable. Now, obviously we want to receive the whole amount from them. So accounts receivable will have to change by 736. The GST is going to be 736 times 3 divided by 23 is $96, and the difference is going to be $640. So let's make those changes. The fees will go up from 85400 to 86040. The GST will go up by 96. Now, why does GST go up? Well, GST is a liability, and when we make a sale, that increases the liability. So that's going to go up by 96. Now, I'm not going to change that figure just at the moment, because I can see that the very next item there is also going to include GST. So, and then the third one is accounts receivable, 736 on top of 2,100 over here, makes it go up to 2836. So let's put a line through that. Okay, so there's the first one done. Tick that one off. Okay, the second one's an invoice on hand for the purchase of new cameras, $14.95. If we go over to cameras and equipment, there they are there. Now they're an asset in this particular case, an asset. Very careful there, because you can have invoices on hand for purchases for either inventory or for expenses. So you've just got to be a bit careful about how you process those. In this case, it's cameras and equipment. I'm just going to shorten that. GST, and in this case, because we've bought it and we're going to pay for it later, for us it's going to be an account or an accounts payable. Obviously we're going to have to pay the full amount, $14.95, so accounts payable is going to change by $14.95. GST, let's check that. GST is going to be 1495 times 3 divide 23. Oops, that is not right. 1495 times 3 divided by 23 is 195. 195, and the difference looks as though it could be 1,300. So cameras and equipment is going to go up to 35,300. GST now is going to go down by 195. And accounts payable is going to increase by 1,495. So there it is there. Let's use that calculator again. It's going to be 1,650 plus 1,495. 1,495. It's 3,145. So let's change that to 3,145. And let's do this GST calculation. So it starts off 680. And we're going to add 96, and we're going to take away 195. So that's 581. So that there's going to become 581. And let's cross those out because I'll just confuse us otherwise. Okay, that's that done too. So that's the second one ticked off. I reckon those are probably the hardest adjustments. Now the next one is advertising of 200 has been paid for the following year. So we don't want to record it in this year's financial statement. So let's take 200 off that, and that takes that down to 1200. And because we have paid it, but for the future years, we're going to call that a prepayment of $200. And that is a current asset. So that's that one done. Office wages of 1,000 are still owing. So there's office wages. We still owe an extra 1,000, so we should have paid 29,000 this year. And because we haven't yet paid it, it's an accrued expense. That means an expense that we've built up, but we haven't physically paid it yet. So it's an accrued expense of $1,000, or accrued expenses. Okay, there's that one done. Now, interest of 80 on the term deposit. Now, a few of you struggled with the term deposit. There it is over there. It's a non-current asset. It's a non-current asset. It's just money that you put in the bank for a period longer than a year. And the interest that we receive on it is a source of income for us. So we're told that there's an extra $80 due to be received. So we better record that. That'll increase that from 250 plus 80 equals 330. And then we have what we call accrued income. That's income that we've earned, but we haven't received it yet. So it's accrued income, $80. Okay, so there's that one done. Now let's do our depreciations. So the first one is depreciation on office equipment. What is it? 5% straight line. So office equipment is 19,000. Just straight line just means we're going to depreciate it 5% every year. So 19,000. This is how I would calculate it. I go 19,000, and I want 5%. So I just go times 0.05, which is another way of saying 5%, and that equals $950. So we know that the depreciation is for this year is going to be $950, and the accumulated so far is going to increase by $950. I think that makes it $4,750. Okay, so there's that one done. Next one is cameras and equipment of 2,000. That's pretty easy. Depreciation on cameras and equipment, 2,000, and the accumulated goes up by 2,000 to 8,400. So there's that one there. And finally, depreciation on studio fittings. Depreciation on studio fittings is based on an estimated life of 5 years and a residual value of 1,500. Okay, so where are they? There they are there, studio fittings. So that's 9,000. We're going to sell it for 1,500, so we don't need to include that. So let's take out the 1,500. So that equals 7,500. And we're going to own them for 5 years. So we're going to depreciate by the same amount every year. So let's just divide by 5. And that equals 1,500. So the depreciation is going to be 1,500, and the accumulated depreciation will go up to 2,600. Okay. Finally, you're told that insurance should be allocated 20% to the office and 80% to the studio. So look, what I tend to do is I just go to insurance, here it is here, and go 20, 80. Now that just helps me remember when I'm doing my income statement, just helps me to remember that I've got to split the insurance between expense categories. Okay, so next we'll move on to our income statement.